Hey, how's it going, guys? Welcome to subsection 6 of section 3, where we talk about Wyckoff. So in this video, it's going to be, again, just like in section 2, the 6th video is going to be a little bit more in-depth, a little bit more advanced, and is going to tackle the same concepts you've dealt with in a more drastic and substantial and usable way. So something that we teach throughout these sections is basically that when Wyckoff unfolds, right, with the bind climax, the AR, the ST, the UT, the UTAD, and the break below, that's when we begin to look for the tests of the schematic and take that lower. Now that is fully valid. However, what you will soon notice, especially if you're testing all this, is that this can be one schematic, and this is how it could play out, and it could give you the perfect sign of weakness that breaks the AR, right? So if this is the AR, you have a perfect sign of weakness that breaks that AR, comes back up to test, right? That last up move before the down move inside of here, and drops off and begins to give you lower prices that you can, again, partial on and take to the lower side. Now, another thing that can happen, and this also happens a lot, and I'm sure a lot of you are aware of something like this, is you have something play out that looks like this. You have the bind climax, the AR, right? Some kind of ST, maybe you have some equal highs here, right? Maybe a sign of weakness in phase B, a UT, right? Maybe it comes up to make a UTAD, and then it breaks, tests, and then the AR still hasn't been broken, but when the AR breaks, you never get a return. Maybe it comes to test the ManFX block right here, right? But what you see is price just kind of falls off the face of the earth and begins to mark down. Now, in more advanced scenarios, what you can do with Wyckoff is understand where Wyckoff is happening. So let's say you have, the same thing that we spoke about in the past. If you have structure being delivered and then a break of structure, and then you have a POI. When price gets here, you are already looking for what? Confirmation. We are aware of that. Now, when that confirmation happens, so again, I'm just showing this off, just making it a little bit bigger so you can see it. It's going to come in, bind climax, AR, ST, UT. Again, this is a perfect example. It's not ever going to be this perfect. Most of the time, it'll look something like this, right? It'll come up, BC, maybe like an AR, ST, UT, UTAD, right? And then break down, right? Just like that. Maybe it never comes up to test and it just breaks down, and you're expecting it to come up to test one more time, but it never does. Now, the thing you have to be aware of as you begin to understand how Wyckoff delivers more often, right? What you're going to notice is that you can start to get involved on the UTAD break of structure. So if you have a zone and that zone, right, is being mitigated, and then this happens and you get a breakdown, you need to recognize that already at this point with a minor structure shift, so this is still a structure shift, you are valid to go for sells off of the UTAD here to catch the test down into lower prices, because there isn't any confirmation or there isn't any guarantee that a break of the AR right here is going to deliver you with then another push all the way back up into a test and then a delivery lower. Now this can happen, and this usually will actually happen on much lower timeframes, because on lower timeframes, there's a lot more orders, right, being sent in. However, on a larger time frame, oftentimes, if you have Wyckoff deliver and Wyckoff finishes all the steps of the liquidations and then break structure, right, the odds of it coming all the way back here are very low, because enough orders have been taken in and there's so many orders that it's time to just move higher, and it'll kind of just mark up like this, right? So that's kind of what happened on EU's daily chart. So let's take a look at that very quickly. Let's get rid of all this. And again, we'll go over this in a second again and talk about the importance of it. But on EU, for instance, right, a long time ago, when you had this daily reaccumulation even, right, or even this accumulation, you can see that potentially you have something like a selling climax, AR, ST, the liquidation of that as the ST and B, right? There was a break of structure and it tested. This is where the test was created, but notice how it did not break the AR. By the time price broke the AR, it didn't have a reason to return all the way back into these areas before going higher, because it's already fulfilled most of the things that it needed to fulfill here. So there was a test, an LPS, and there was opportunities to get involved in here off of the demand zones, and then the markup began. And after the AR break, yes, it came back to test just a little bit of the AR, maybe some areas in here, but it honestly just took off relatively quickly. And again, you have the same thing that kind of happened right here with the reaccumulation, right? So again, instead of studying this whole thing as reaccumulation, we can just view the selling climax, AR, ST, STB, right? Spring, right? This low comes a little bit lower than everything else. In this case, we actually had a break of structure, and it did come back a little bit deeper into here before marking up. So in this case, I guess it did work. But what I'm trying to show you guys in this subsection is that a Wyckoff schematic can also deliver to you and give you great entries before it breaks the AR. So yes, as a beginner, you should be using, so if you have a buying climax, an AR, right? So that's the AR, an ST, that's the ST, right? So equal highs, a UT. Honestly, if you're new, you want to wait for this break to confirm the structure and maybe look for trades off the MetaFX block or off of the deeper tests if the tests do provide themselves, and take that lower. However, as you become more advanced and you understand how you expect Wyckoff to form and form before an area is tapped. So let's say you have this area on a previous larger structural move and price starts coming up into it. What you want to do is you want to be already preemptively ready for this UTAD to happen. And as that UTAD happens, right, you need to be ready to catch it like so. So what's going to oftentimes happen is it's going to come up, stop, come up, right? This is the UTAD now. And even though this is the AR, this break of structure is already signifying where you can start to look for a test, right? And price can come up, maybe give you a fractal distribution here that you can then use to get involved, or you can already look to get involved knowing that you had structural breaks of structure, you have structure continuing lower, so you want to expect the liquidity to be grabbed right here, and now you're seeing distribution occur, and if most of the distribution has already surpassed and you've had enough liquidations of highs, therefore you understand that weak hands are being transferred to strong hands, those people are being taken out, and as we're seeing the structural shifts on a lower time frame, or even on the same time frame as the Wyckoff schematic, we can already look to be involved on the tests, right? So this is actually what happened in the last few days on Australian dollar, US dollar. Let me show you guys an example, and also what's happened on gold, so you guys can understand a little bit about what I'm doing. Again, if you're new, focus on waiting for the break of, in this case, the AR, right? So this break confirms this schematic. Otherwise, as you become much more advanced and you begin to see these areas more and you begin to understand how you want to look inside supply and demand zones for sells, right? So if you have structural breaks, right, it comes down, starts coming up, comes into a POI just like this, and the UTAD happens here and the break of structure happens here, you're already valid to go for the test inside of here off the last buy before the sell, even before it breaks below the AR, because it's never a guarantee that a break of the AR will make a move all the way back up into where the UTAD was. That's never the case. It doesn't have to be, right? So if we go and find the Wyckoff, if we go to that stock charts website for Wyckoff very quickly, here we go. And we just scroll down to the schematic, right? You can notice that the actual schematic, here, let's find an easier one. There we go. The actual schematic actually plays out the way we're talking about right now, right? Where basically there's going to be a UTAD and there's going to be breakdowns in price, and the tests are going to happen before price breaks very large structure. Now, as you all know, schematics can be delivered in a number of ways, and they have the snowflake rule. So you can choose to utilize only schematics that break the sign of weakness in phase B, or the AR, and then come back up to test, because they don't have to just break down in LPSY all the way down. They can also break down, come all the way back up to test the UTAD, and then break down. That's one way to view schematics. Another way, and a more advanced way, is to understand that there is Wyckoff already undergoing, and as it approaches your POI, you already know. You have the buying climax, you have the AR, you have the ST, you have a potential sign of weakness, but in this case, it's just a test of another AR, which is fine. The UT, you have a potential UTAD, but because your zone is higher, you know that this whole move right here is its own UT, right? You have prices coming higher, and the UTAD happens, and the second it begins to break down, you know that this schematic is becoming verified because of the fact that it is mitigating an area you expected it to mitigate, and now is delivering price lower. So you can already look for the tests, right? Just like this, the tests before the breaks of the sign of weakness and the AR down. And then as price breaks down, yes, it might break the AR and then come all the way back up to give you another test. But in some cases, it's going to break down, maybe come test the MetaFX block here, maybe come test some of the supply zones in here, maybe fractal distributions inside of here, right? These are just examples. And then it'll have the mark down. And if you are someone that's new, you will miss this trade because it will break the AR and it will not come back up here. However, it's going to give you a premise and a beginning of something that you can use to work with. So let's go over a few examples very quickly, just so you understand what I mean by what I'm showing here, okay? So you know exactly what I'm talking about. So we actually had an Australian dollar, US dollar trade sent out. Let's go find that really quickly so anyone that's new and didn't experience this at the time of can understand exactly how it happened. So let's take a look right here. As you can see, I had a zone. Australian dollar, US dollar, it's kind of hard to see, but it's okay. It began to come in, and I was basically looking for a UTAD, a breakdown, and a test, right? However, if I do see a UT or something of that nature and a breakdown below structure, this also confirms the schematic because I have a very precise point at which I want to look to get involved. So let's go take a look at the 1 minute. And let's talk about, so this is another trade today. We'll talk about this in a second. And here's a trade from yesterday. So what we had is structurally on a higher time frame, we were breaking down like so, right? You can see it by the blue denoted dots. The breaks of structure lower, and we were basically looking for price to trade back up into an area of supply, which again is shown by either MentFX blocks or refined areas that you can go ahead and refine using the things available in section 2. And what we did then is we used that area to wait for the confirmation to take price into a sell and take it down again below the liquidity created by that move. So on a higher time frame, right, you have to recognize that again, across multiple time frames, you're going to have price deliver in a certain way. So on this higher time frame, the break of structure happened right here with this wick, and we expected it to swing right back up into the supply zones up here, which you can go and refine to, again, if you notice, this last wick up, which is where it wanted to go. So again, you can go ahead and refine this very simply to that wick. And what you do is we wait for that point to be tapped before we look for confirmations. Now, because we're on a much lower time frame, you can see that we have to spot the schematic on a lower time frame. Again, this does not mean you need the 30-second or the lower time frames to spot them, but in this specific case, it was the 30-second on which the schematic itself was spotted. Okay? Actually, I think it was the 1 minute. So actually, in this case, it's a great example for a lot of you guys. No, this one was on a 30-second. The other one was on 1 minute. So we'll look at that in one moment. Let's go to the 30-second and let's zoom into this. Okay, so this is an example of a type 2 schematic, which you could technically call relatively ugly. Okay, and what you'll notice here is prices came up into the buying climax, came down to make the automatic rally, made the ST, testing the buying climax, again, creating some kind of trend line of liquidity or some kind of liquidity, made that sign of weakness in phase B, came up to make a mini UT, made a UTAD, right? Because remember how we think about the schematic, the BC does not have to be taken out. It usually is, but not always. So in this case, we have a kind of a weird snowflake type 2, type 1 schematic based on how you labeled this. Alternatively, on a lower time frame, as you all are aware, and you can follow the moves here, you also have a buying climax, an AR, an ST, an upthrust, and a UTAD, right? A mini break, a test, a break, an LPS, and then a breakdown. So you could have also looked to trade this on a much lower time frame, which I did not, but I did see this happen, which is why I was more happy about taking this trade down. So as it broke down, you can notice that it never came up for another LPS or a sell or a test, right? Instead, we looked to sell stop the actual sign of weakness entry, and as it came through it, that's when the sell got triggered, stop loss above the schematic in this case, and we took that lower without any test given to you. Now on a lower time frame, let's go find that really quickly. You can see that you might have, if you had the chance, seen the mini schematic that occurred right here. Again, this is a very small time frame schematic and you don't have to do this, and we're going to look at a higher schematic in a second. But again, there's a buying climax, an AR, an ST, an upthrust. The break of structure happens here. Notice how we don't swing below the sign of weakness, but we come break the structure, come to test the last up move before the down move, right? That MentFX block. The last up move, you can see the wicks are perfect. I can just draw a line for you to show you that really quickly. There you have it, right? Algorithmic price delivery, testing the last possible areas of orders and mitigating them before dropping lower. So that's an example of where you could be selling prematurely into a schematic, understanding that the area you were looking for the schematic to occur is where you're starting to see liquidations, right? Otherwise, the way that we'd stay out of this, for instance, is if price, did something like this and then continue just reaching through it like so. And there's no reason to get involved because we know that price delivery is actually set now to the top side, right? So now let's take another look at another example very quickly. Let's go back to the 15 minute. Let's scroll over here to the side. And again, what we have here, right? You can see the same thing that we speak about in section 2. You have a break of structure occurring. That break of structure is being met by this low, which is now considered liquidity. So we can go to a lower time frame so you guys can see this a little bit. But you have this break of structure, comes down, right? As it starts coming up, we know this is liquidity if price is to continue delivering in a bearish way. And what we also have, so let's get rid of this line. So there's actually two setups that happen here, but we're going to look at the setup we took. You have the MentFX block from the wick to the wick, right? Remember, any down move before not move, a large one like this, an impulsive move that took liquidity, right, counts as a ment block. So this whole thing is a ment block. Right? Now, as we get to a lower time frame, in this case, a minute, we can see what happens as price approaches it. So this little red line is the open of that ment block. We can delete this now and we can view this now, right? Notice what happens here. Again, this is another way to utilize schematics and get involved on them, right? This is a premature way to enter them. However, you are more likely than not going to get into more moves using these rules for schematics. So as we're coming up, we have abruptness and price, a PSY being established, right? Maybe one is here as well. Either one is valid. That's fine. Coming up to the buying climax, coming down right to the automatic rally, up into the ST, which in this case comes higher than the buying climax, but that's okay. If you watch section 3 all the way through and took notes, you understand this is fully valid and can happen. The UT comes, maybe you can offer it to this wick right here. The UT comes. So at this point, we are actually tapping the MentFX block, right? So at this specific point already, if prices were to fall off and break structure right now, this would be a type 2 valid schematic to take an entry off to take lower, okay? Because we've tapped the area we've been looking at and we are seeing the weak to strong hand transfer. And instead of waiting for prices to basically break down below the AR to fully confirm the schematic and then potentially not come back up, we are looking to get involved on the premature formation of the schematic, just like in this case, this distribution is shown right here, right? There's no telling or guarantee that a schematic will have to come and test after breaking the AR, right? After breaking the AR, it could come back up and test if it needs to, and then drop off, or it can also, right, on a lower time frame, right, break structure, test, and then break down, and never test again after breaking the AR, right? So this is an example of that. So we're waiting for that break now, right? We're just watching it, and at this point, what do we get instead? Instead, we get a UTAD that makes a new high. Now notice how nothing was broken yet, which is fine. So now we have a type 1 schematic confirmation within an area we expected to see sells from, and we have liquidity below that we know we want to target. So this is kind of what we have. And now we're waiting for the break of structure right here to show us that there is at least some kind of shift from bullishness into bearishness after we've already shown that liquidity is being taken from the top side. And what's liquidity? Basically any swing high that gets traded through, right? So you've seen this and you should be aware of this after watching all the sections. So waiting for the break of structure, and we see that break of structure right here. So we know that there is some kind of shift in structure that is leading price to go lower now. And instead of waiting now for this AR to be broken before we look for the confirmation to get in, because, you know, this move doesn't always have to happen, and in some cases it actually will not, especially on a higher time frame and sometimes even on a lower time frame. At this specific point, the last up move before the down move technically is seen right inside of here, which is now confirmed to be taken for sells lower if prices are to tap back in and then drop off. So what we actually have happen here is this schematic right here, where we have everything play out, the UTAD plays out, and instead of it breaking and then coming up to test, it's testing up inside of the shifts of structure in the UTAD area. So this is that UTAD area inside of our MentFX block where we're expecting bearishness from. Weak hands are being taken and transferred into the hands of the strong, or the strong-willed, or the ones that understand what's happening in this market, and are now bleeding prices lower, shifting overall sentiment and bias into a bearish institutional order flow on the 1 minute. And again, this will happen on all time frames. So what happens as a result? Again, we have that break of structure. Now we're looking for that test. Price comes right up to test it, right? It actually comes deeper, so you could go and refine these areas, but we don't need to do that because we've already seen everything we need to see. And we start understanding that now we want to see the breaks down into those areas, and most importantly, to the liquidity here. Because under the way we understand the price, if there is a transfer from weak to strong hands, there needs to be some kind of reasoning for it. And the reasoning for this transfer is to at least bring prices to some kind of liquidity lower, so those orders can be met with corresponding counterparties, which are going to exist under these equal lows, which are going to exist as sell stops under the swings, right? That's liquidity for you. And again, just because that's liquidity doesn't mean that should be your end target. You can then look to, especially if you have a higher time frame bias, look to target lower prices as well. But in this case, the liquidity point is a fine area to target, right? As prices tap in, they drop lower, and you can see how very quickly prices were delivered to you. And notice how after the AR was broken, you only had one more candle reach back up into the MentFX block, drawn out by this, right? So it did test the schematic, but it did not come all the way back up into some of the areas here. And that's what's going to happen. So again, there are advantages and disadvantages to using premature structural shift entries Wyckoff wise, or confirming your Wyckoff entries with AR breaks, right? Because I can almost guarantee you that even though this came to only test the MenFX block in here, there's more likely than not a very, very small schematic that occurred here. Again, we can jump on a much lower time frame to try to view that. So actually, there's not really. Maybe on a 1 second, there's a very small schematic here, but we're not going to get into that too much. Let's take a look at another example. So there was another one on gold, I believe. Let's exit all this. Let's go find where it was. So yeah, it was right here. So again, very simply, what you have is you have a very large area that's a MenFX block, right? Big up move before a down move, break of structures are happening, and what you do is you can go inside of there and refine that area to the mini MenFX blocks inside, right? So basically, I just kind of followed price along, MenFX block, MenFX block, MenFX block, right? Just following along, and honestly, this is the last one that was left untested. So you can take the 50% of it, or just the open of it like that, which is what I did, right? You can draw out the MenFX block yourself if you'd like to. I just use the open because I know where prices are coming, and that's how I set an alert. Now, as you can see, this is a 1 minute entry, I think, so it's good for you guys. Yep, there we go. So as you can see, price makes its way up into the area. And as it gets there, is there anything that is kind of liquidating right now? No. So the schematic only begins once it actually gets here, which is fine. So we come and make a buying climax. We come down to an AR either here or here, right? So this could be an AR. This could be an ST, right? And this could be a UT and a UTAT. So this is honestly, at the same time, a type 1 and a type 2 schematic, right? The way you label it does not really matter, right? So this is a valid schematic, right? So is this to the ST here, to a sign of weakness in phase B here, right? These are both valid ways to label the schematic. Both are fully correct. To a UT right here, liquidating that ST, and in this case, making more liquidity at the buying climax, and the UTAD up here, right? Both are perfectly valid. So in this case, this would be a type 1 schematic now, and the other one would be a type 2 schematic, right? Based on how you were looking at it or what time frame you were looking at it at. Right now, notice the sign of weakness and the AR exists down here. Now, notice what happens when price breaks that. Does it ever give you that retracement? No. So if you were a trader that waited for the AR break and looked for the retest, it's not always going to happen. However, understanding that this is the area you wanted to sell at and seeing that Wyckoff is occurring in the form of highs being made for the purpose of liquidation, and then you see what? Right, so again, let's go back here. As we're watching this occur, where is structure holding, right? Higher high, higher low, higher high, higher low. So basically a break of this could confirm a Wyckoff schematic. However, if we got this break here, right, without this high being made, we would see this as a potential trend line of liquidity. And in some cases, we'd want to stay out because Wyckoff or the weak to strong hand transfer is not being shown, right? If we only saw this, this is not a schematic in our eyes. Maybe for some of you, but honestly, there's nothing much here. Now, you can consider this a type 2 schematic, and if we do get the breaks, you can look to be involved on it to take it downwards, right? And if that happened, then that would be actually fully valid. However, if you have a refined way of looking at schematics and you see this as a equal high, then you want to look for the liquidation of that. So as we watch, we get a liquidation of that right there. As that UTAD happens, we ask ourselves where that came from. And where that came from was pretty much this structural point right here. So our idea now, right, would be to either, if you're a beginner, to look for the break of the sign of weakness and maybe the test off the MenFX block, or deeper to take it lower. On the other end, it would be to see prices shift bearish in an area we expected it to go bearish, and then look to be involved on the last up moves before the down moves and take that lower. So if the schematic doesn't want to come test it, we can catch it on the way down into partials and the liquidity that rests, you know, down here and in all those areas down below. So in this case, maybe we're watching this, right? And right there, we have a break of structure. Now, where did that break of structure come from? This POI right here. So again, you can take the 50 of that if you'd like, if you don't like how close it is, right? As an entry criteria, you can take the open of that if you'd like. Either one is valid. At this point, I would suggest putting it above the UTAD just to make sure. But yes, this is also valid because technically you had this up move. That up move was tested by this move, and theoretically price should not return above here if it is to continue downwards, right? And again, you have the start of a type 1 or type 2 schematic based on what you're seeing, and your entry criteria is being based on the fact that you had an area you wanted to sell from, and structure is now being shifted to the bearish side, and you're looking for those tests to continue lower. And in this case, again, you're expecting the test to occur in those shifts before the breaks of the sign of weaknesses and breakdowns in price, right? Kind of the same as this as well. Maybe you have a UT, so this is a type 2, a UT, right? It comes to test it while breaking structure, so this is like an LPSY test, and then when it actually breaks the AR and sign of weakness, it never makes a move back up into those test zones. right? So that's what's happening here. And again, this is perfectly valid to be taken to the downside. So prices come up, as you can see, tested with just that wick right there off the 50. And if you use the open, then of course you get in. Off the 50, you do as well. So both are perfectly valid. And from there, you have, again, the drop-offs. Yes, it comes and liquidates the sign of weakness in phase B and then pushes back up to test the last up moves here. So even if you waited for the sign of weakness in phase B, you might have had an opportunity to get in on the MetaFX block here, or on the last up move before the down move right here, right? Because that got tested right there. If you think about it, let's go to a 30 seconds so you can view it, right? Liquidation, showing you confirmation of the sign of weakness, move but right back up to test the last up move before the down move, and then it bleeds lower. So again, you have a way to confirm your schematic, or as you get more advanced and you begin to see the areas in which you expect Wyckoff to occur, you'll be able to get involved on the breaks of structure and the test of the actual test, right? So a test can happen before the actual break, as you all understand, right? And then prices, of course, bled significantly lower. And again, along the way, you look to partial, break even, potentially start to move your stop, and then maybe get stopped out here, or move your stop more aggressively. I mean, less aggressively, conservatively, and move it to here, then start to move it up to here, wait for a new low to be made, then move it down to somewhere in here, wait for a new low to be made, you know, giving some time for it to liquidate, potentially if it makes a new low, moving it to this high right here or this high right here now, right? Sitting in this about 1 to 15, right? With partials, so maybe a little bit less. So maybe it makes a new low here, so you move to here. If it gets a new low here, it does. So maybe you start to manage it a little bit more aggressively, maybe to these areas, and you get stopped out there at about 1 to 20, right? So that's an example of a schematic that played out off of seeing the structural shifts before the liquidation of the sign of weakness in phase B, or the AR, okay? So yes, the validity of a schematic will be made when the AR is broken, right? That's the best way to basically verify a schematic happening. However, sometimes waiting for that validity will mean that you will miss out on the move that will come to test and then drop, because what it'll do is it'll already start to drop as it's already made the tests it's needed to make up inside of here before the drops, right? Now, if you understand the exact areas that you want to look for those sells from, and you begin to see Wyckoff occur, and you begin to see those changes and shifts in structure, then you can be involved on those tests before the breaks below the AR, right? So this is, again, a more advanced subsection of this section, but it's giving you the tools that allow you to get involved in schematics before they fully verify. Because understanding, right, again, that you have structure, breaks of structure, areas, and liquidity, looking for price to come down and confirm your entry, right? And as it gets there, it already starts printing equal highs, equal lows, right? Breaking, breaking, breaking. Now, again, at this point, the AR is right here, right? So you would be looking for a break of the AR and then a test. Now, that's not always the case. And sometimes, even if you get that, it might come just to test the MetaFX block, which means your stop has to be below here to take it higher. On the other end, if you waited for some kind of spring to happen and it's still within your zone, and then you get a break of structure, you can assume that this is break of structure here is going to be part of the larger confirmation of the Wyckoff schematic, and you can be involved on the test moves that will technically deliver to you. Let's go find the accumulation schematic. That will be delivered to you like so, right? With the spring, the shift in structure, maybe above like short-term structure, and the test right here of the last down move before the up move that then goes to break the AR. And as you can see, as it breaks it, it makes the real sign of strength. The backup is only to the MetaFX block, if not a little bit less, and then the markup occurs and you miss out on the trade, right? So again, if you're new, do not utilize this because it will screw with you early, right? Go and test it. If you're advanced and you've already seen Wyckoff happen a lot of times and you know exactly what I'm talking about in terms of Wyckoff forming and then moving without you off the validation, then begin to utilize and test the concept available to you right here. So this test is already valid, right? Then as it breaks higher, maybe you can look for entries off here off of confirmation Wyckoffs or a little bit lower. And then as it breaks, it might come to test the buy up of the MetaFX block, or it might even come all the way back down, right? This is where it comes to choosing whether you want to have whether you want to be a trader that's okay with entering early on a Wyckoff or a little bit late, and then taking that to, again, partials along the way within imbalance, within liquidity on this way down. So, you know, partialing, and most importantly, the liquidity of your continuation in trend, right? So that is how you want to use advanced Wyckoff. This is what I want to deal with in subsection 6, which is that, yes, it is true that a Wyckoff schematic distribution or accumulation is confirmed by a sign of weakness, or I'm sorry, by a break or a sign of weakness that breaks below the SO, W, and B or the AR. However, just because that is true does not mean that you can get in prematurely on the breaks from a UTAD or a UT. So again, begin to test this, begin to notice it occur, and you will see how many opportunities can be presented to you, right? So this is just a few examples of what happened this week. And the idea behind it, again, last time, is that a schematic begins to occur, bind climax, AR, ST, right? Sign of weakness in phase B, maybe, a UT, right? Begins to come up, a UTAD, and now you already know this is Wyckoff, right? In your mind, you should already be seeing this happen, right? This should be in your mind, this little dotted line I drew. However, at the same time, you should be aware of the fact that just because validity of this zone only becomes valid after the break of the AR, does not mean that it will come all the way back up to test and then drop. It can easily come up, drop, or even just begin to drop off. Now, that also means that part of it is knowing that when this occurs, this break will be met with a new mental effects block here, or even a last up move here that might be tested as a real test, right? Just like shown here, right? Just flip that. So if we just go up here, or down, I guess, right here, right? That's the test off of the confirmation of the shift in structure on a lower time frame, and then the real breaks happen, right? And again, that should be done in a POI, an area where you're already expecting Wyckoff to occur. Otherwise, it will screw with you. There's Wyckoff everywhere, as you all understand. The snowflake rule stands true. And now you have another way to get involved on a more advanced route when you see Wyckoff taking place, or as we like to call it, the transfer of the weak hands to the strong hands. So thank you for watching, guys, and hopefully that helps you in understanding some more Wyckoff, all right?